95%. I mean, just let that number sink in for a second. 95% of day traders completely fail. We're not talking about just having a bad month. They literally blow up their accounts and walk away with absolutely nothing. So that naturally brings us to a huge question, right? Why do so many incredibly smart, driven people end up losing their hard-earned life savings in the market? I mean, we're talking about analytical thinkers, professionals who crush it in literally every other area of their lives, and yet the market just completely humbles them. Why is that? I'm super excited to walk you through this because we're stripping away all that internet noise and focusing purely on what actually works. This isn't some theoretical fluff. This is about surviving and thriving in what is arguably the purest, most unforgiving business ecosystem on the planet. All right, really quickly, here is our roadmap for today's explainer. We'll start with the day trading myth, move right into keeping strategy stupid simple, cover the 5 pre-trade setup checks, dive deep into mastering risk and psychology, and finally, we'll talk about paying your time debt. Okay, section 1, the day trading myth. It's time to confront the harsh reality of the markets. Look, there's this massive illusion out there that trading is some sort of get-rich-quick scheme. You've seen the amateur approach, right? Cluttered charts, like 8 different indicators, just constant chaos. But professionals? They keep things remarkably clean. They rely on basic price action. They intimately master just one single asset, and they relentlessly extract one simple edge. And honestly, the chaos is exactly what leads to those account-blowing mistakes that feed that 95% failure rate. Things like jumping between strategies just because you lost a single trade, or trading huge size when you didn't even have consistency yet, chasing a move after it's already dropped way past your entry zone. But guys, the absolute worst, the most fatal error you can make is trading without a stop loss. You enter a trade, go grab a coffee, and come back to a completely blown account because you refuse to just take a tiny 1% loss and instead let it snowball into a 100% disaster. Just don't do it. Moving on to section 2, keeping strategy stupid simple. This is all about mastering your specific domain. There's this incredible piece of veteran advice that comes straight from decades in the trenches. Do not underestimate the power of simple stupid. You just need one simple edge. Think of the market kind of like a movie. If you watch a movie once, sure, you catch a few cool scenes. But if you watch that exact same movie for 2,000 days straight, you'd be an absolute master of it. You'd know every misline, every tiny nuance. That is exactly what trading one simple edge on one asset looks like. You literally become the ruler of that domain. And to achieve that long-term profitability, you've got to treat it like a strict, boring business. You must categorize your setups into a ranking system. Honestly, if you don't rank, you won't bank. A tier 1 trade? That's your absolute best, high-probability setup where everything aligns perfectly. That's where you take on max acceptable risk. Tier 2 is a solid setup, but maybe, one confluence is missing, so you use normal leverage. And Tier 3? That's basically a 50-50 gamble. Skip it entirely. Because without this structured ranking, you're going to treat every random market twitch as an equal opportunity. And mathematically, that is a total death sentence. All right, let's get tactical. Section 3, the 5 pre-trade setup checks. This is your professional checklist. This is the exact procedural flow you need to run through every single time. Step 1, identify the higher time frame trend. Remember, when in doubt, zoom out. Step 2, never buy in the middle of nowhere. Always wait for the price to pull back to an actual area of value, like a moving average or a solid support level. Step 3, wait for a trigger, maybe an engulfing candlestick, something that proves the market is actually rejecting that area. Step 4, check the economic news. Seriously, a sudden data drop can instantly spike the market 100 pips against you. And finally, step 5, plan your exit. You need to know exactly where your stop loss and take profit are before you ever risk a single dime. I really want you to burn this concept into your memory. Focus on making good trades, not making money. I know it sounds super counterintuitive, but think about an NFL team. They aren't trying to score a touchdown on every single snap. They focus on executing one good play at a time. And if you stock enough good plays, the touchdown happens naturally. This is exactly why you have got to hide your P&L screen while you trade. Staring at that fluctuating dollar amount is a guaranteed way to detach from your strategy and make a totally emotional mistake. Which perfectly tees up section 4, mastering risk and psychology. This is about winning that mental war against yourself. Here's the deal. No matter how amazing your strategy is, you absolutely have to fall in love with losing. But you need to understand the difference between the two types of losses. An acceptable loss is literally just the cost of doing business. Imagine starting a new corporate job. You've got to spend money on nice clothes and your daily commute just to earn your paycheck, right? In trading, if you followed all your rules on an A-plus setup and some random market event stops you out, well, that's just a wardrobe expense. It's totally fine. But the unacceptable loss, that's when you break your own rules, or trade just because you're bored, or blindly follow some guru online. Those have to be eliminated entirely. And the undisputed king of unacceptable losses is revenge trading. We've all been there. The market takes your money, you get furious, and you completely throw your rule-based system right out the window just to violently trade and try to win it back. This is the market playing on human nature at its finest. Always remember, traders do not blow up their accounts from one bad trade. They blow up because they over-leverage, spiral into a complete rage, and revenge trade until their balance literally hits zero. So to protect yourself from yourself, you have to establish what we call a GTFO limit. Yeah, it's a bit crude, but it is absolutely vital for your survival. You need a hard, predetermined numerical limit. Whether that's 3 consecutive losing trades or hitting a specific dollar amount, when you hit it, you are out. You close the laptop, you put the phone away, and you physically walk away from the screens. Period. You live to trade another much clearer day. Finally, Section 5, paying your time debt. Surviving that massive learning curve and remembering your why. You really have to grasp the concept of time debt. Look, there are zero shortcuts in this market. The market does not care where you went to college, and it definitely doesn't care about your past success. You have to put in the screen time. You have to actively journal every single trade. Your entries, your wild emotions, your stupid mistakes. It is just a mandatory, unavoidable period of repeated failures that literally every single elite trader before you has already paid. Trading is honestly exactly like the Chinese bamboo tree. You water it, you nurture it every single day for years, and it shows absolutely zero visible growth above the ground. You're suffering through negative results despite giving it your absolute maximum effort. But underneath the surface, this massive complex foundation is building. And then suddenly, it just spurts up all at once. Your trading consistency, it's going to arrive in that exact same way. So when you're stuck in that invisible growth phase, when you feel like you're losing your mind and hitting that fork in the road where quitting just seems so incredibly easy, you've got to stop and ask yourself, why did you start? Who were you thinking about when you first opened that brokerage account? Was it to give your family a life where money isn't a constant stressor? Was it to finally buy back your freedom and your time? Because if this is just about ego or just about a quick buck, you're going to quit the second the pain gets too high. Your why has to be so much bigger than your daily frustration. Just remember this one emotionally resonant truth. If you quit, every single ounce of effort, all those late nights, the early mornings, the brutal losses, it was all for absolutely nothing. All that pain you endured was entirely wasted. The final step from being just average to truly elite is a step that no mentor, no magic indicator, and no expensive course can take for you. You have to dig deep and find the internal strength to take it yourself. Which leaves us with this final, provocative question. Are you actually willing to pay your time debt? Or are you gonna let your why become just another excuse? The statistics we started with are brutal, but the roadmap to surviving and thriving is literally right in front of you. Keep it stupid simple, stick relentlessly to your rules, fiercely protect your capital, and never ever give up on your why. Thank you so much for hanging out with me on this explainer today, and I seriously challenge you to approach the charts tomorrow with a true professional mindset. You've got this.